Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendahl with tonight's deep dive for October 19th, 2017. You probably would think I was going to be talking about the S&P 500 given the anniversary of Black Monday back in 1987, but I am actually going to be talking about corn today. So obviously the symbol for corn is C for trading on the future side, but the corn ETF is CORN. Very logical. So what I want to do is talk about corn, because I was talking with a client the other day and we were discussing, what markets do you want to look at when you want to initiate using our service. So that's why I'm going to be talking about corn. So here are the trends. Trends are all pointed down, very negative. The technical indicators are all pointed down, very negative, and there's nothing on the horizon. However, if you've been watching the deep dives, you'll have seen that corn actually was in a consolidation period, and that's what we're going to be talking about, because it has been in a consolidation period and we're slowly coming out of it. So let's first take a look at TradeStation, get an idea as to what we're looking at here. Daily bars for corn. Obviously we had that huge downturn in the market and then that nice little bounce, and since that pivot low, which corresponded to a wave low that we had quite some time ago, that ever since then the market has been moving sideways. We've got nice support to the market. Another one is just being initiated here, so there's going to be a combination. There was a bit of a breakup between the support lines, so eventually the way we'll look at it is we have the main one here, and then we'll start to accumulate some information on this, and we'll basically combine them together. But for all intents and purposes, right now, with the market having gone nowhere today, at least on the close-to-close basis, that the market is still in this consolidation period. This is our energy level. I'll start to talk about this a little bit more. I created a visual for it, and when we're below the that lower level, the green line meaning the energy level, that's when we're in a consolidation period. So we're fluctuating above it and below it, but you can see that we've been meandering down and we have been in this consolidation period for quite some time. Now it's not showing up on the deep dive because we're now coming out of the consolidation. So let's take a look at a few things on the website just to sort of make this abundantly clear. If ever you want to see if a market is in an energy level low, then what you have to do is go to energy levels, and that's just going to pick up where the market is at the current time. So it's not really going to give you the direction we're coming out of it, which is what's really been happening with corn. So corn is here towards the bottom, and anything that is going to be in a purple or blue, that represents a market that's in a tight consolidation. So technically it's still in a tight consolidation, it's just coming out of it a little bit because of a bar that occurred 2, 3, 4 days ago. I do want to point this out, that you can always look at the tendencies to a market as well. So here's the energy level tendencies. You come to consolidation phase, and we just have to find corn here. Corn right here, 3.8% of the time is it in a tight consolidation. So it doesn't occur all the time, so that's something that you want to take action on. So related to what I was talking to a client about, whenever a market goes into a consolidation phase, we kind of view that as a starting point, that it's kind of a do-over, that the market is going to do something. The longer it's in a consolidation period, the tighter the consolidation, the eventual explosion that's going to come from it, and this is where trends obviously emerge from. So we're in that consolidation phase right now. Let's again go back to the website. Let's look at the seasonal tendencies to the market and get an idea as to what typically happens. So here's the 10-year. We'll look at the 15-year as well. Each of these two phases, these two time frames, are in a high correlation period, so they should be viewed and watched. And what you'll see with the 15-year is that the market trends to the upside, but it is choppy. It has trading ranges while it is trending higher. So I'll point that out. 10-year is not as pronounced, but it does have opportunities, and the general trend is to the upside. The 5-year is not in one of these phases, at least right now, but it does have a little bit of phased, and then we have some choppiness. So the last 5 years, we've ended the year on a negative route, and the 10 to 15, meaning the longer terms, they typically end the year on a positive note. All we care about is the fact that the 10 and the 15 are right now highly correlated, and they're showing us the direction. The fact that the market is in a consolidation period tells us that we're expecting some type of an explosive move. The systems currently are a little confused. We've got a hedge going on here just from today's action. So we have a Polaris daily system, which is short, which short yesterday, and then we have a Betelgeuse daily system that went long the other day. So net the account is zero, but we know behind the scenes that we're long one and we're short one, and the market being in this consolidation phase is just simply telling us that it's a little confused and doesn't know exactly where it's going to go. The market's not good. The systems aren't going to forecast something. That's what we use the seasonal stuff for. What we do is we simply react to what the market is going to give to us. So as of right now, it has reacted by hedging itself, and we'd be looking then for an opportunity for the market to show its hand, and then we'll simply react to it. So that's kind of the deep dive for corn here. So just keep tabs on this. The support level will start to hopefully pop up here, and we'll start to see conditions change in the market. Obviously, we'll see in the systems first, but we'll also start to see the trends and other things start to change here, should the market actually start to head higher. The other thing I want to point out is something we just added to the website, a number of videos that will help you to get a better grasp as to the philosophy for this particular service. So the way you get to it is go to membership, go all the way to the bottom, and you'll see core analytic overviews, and then you'll have all these menus on the right hand side. This one, the first one that's going to pop up, is just an overview to what we consider to be core analytics, where we look at the personality of the markets, we look at the technicals related to the market, and then we have obviously the systems that are going to react to what's taking place. So we call that perspective, context, and trade action. Long story short, if you come down to membership, you come to core analytics, you come to this particular page, you get an overview, and then you can look at these other videos as well, which will go into a lot more detail. And each video has a lot of information that we're talking about, and you'll have links at the bottom that once you're done with the video and say, hey, I want to learn about watch lists, or I want to learn about the rolling Kager, you'll be able to click and go directly to that information. So I just want to point that out. So thanks for the little commercial at the end here. Let's see what happens with corn, both in the ETF as well as the futures, and we'll keep track of it and let you know what's going on. Thanks very much for watching. Bye-bye.